This is the current stock market update for SoundHound AI, stock ticker SOUN. Before we begin with today's stock market analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons. Leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. We are looking at the 4-hour time frame. Each candle represents a 4-hour trading period. And the stock itself is starting to come into some fairly significant support zones after seeing a long series of lower highs and lower lows. So there are some questions that traders need to be asking themselves at this point. Do we think that this recent break below $6.55, do we consider this to be a false breakout? Or do we believe that the longer term downtrend is likely to remain in place? So first, we're going to just outline some major support and resistance levels. And we also need to look at the indicator reading here to get a sense of where momentum is actually heading right now. At the moment, these would be the most important support and resistance price levels, as we can see here. And if we look at the moving average convergence divergence, this would be the momentum indicator. As we can see, for the most part, there is clearly negative momentum that is governing this stock. So this shouldn't be completely surprising. The stock has really fallen from about $22 into about $6.50. So it really shouldn't be too surprising to hear that negative momentum is in place. This activity, however, has been going on for quite a while. So there are legitimate questions that can be raised as far as the potential for an upside reversal here, possibly buying in at lower levels. And then we also, as we can see, we have two fairly large harmonic trading patterns that are seen on this time frame. Specifically, these would be referred to as Nen star patterns. They do have the potential, as we can see, to move share prices back above $20 per share. This darker pattern here is a little bit bigger, and it has an upward price target, a number 4 price target above $20.70. And then the smaller price pattern has an upward price target above $20.30. Harmonic price patterns are incredibly powerful. They're very good for contrarian trading, which is not typically what you see on YouTube. People tend to buy stocks and other assets when things are rallying. That's a mistake. People tend to buy at very high levels. You're supposed to buy low and sell high. And that's exactly what these harmonic patterns are designed to do. They spot reversal signals. Now, they're not 100%. They do have a very high trading probability, but they are not 100%. One thing that we pointed out in previous videos was that these two harmonic patterns were forming just as share prices were moving into that critical $6.50 support zone. So that's important because you've got several different factors that are aligning in one area. You've got a major level of historical support, and then you do have two harmonic price patterns that are kind of agreeing with each other. So that's really what you're looking for when whenever you're using price history to make determinations about future trading positions. I have zoomed into this price chart now very closely, and there's a reason for that because, as we can see, there are two boxes here. These are referred to as the PRZ, the potential reversal zone for these harmonic price patterns. In both cases, stop losses would be placed right around that $6 area, possibly just below that $6 area. So the reason that this is significant is because we have recently broken below $6.50. The ultimate price low here came in around $6.40 or so. So that historical region of support has broken. And if we do see share prices break below $6, that would also mean that these two harmonic price patterns are invalidated as well. We're not exactly trading in oversold territory at the moment. As we can see, the stock price indicator didn't exactly fall into this lower region here. This is the MACD indicator. And even though we're trading at these very low levels, you can't really make the argument that we're trading in oversold territory. One thing that I can say that's positive here is that you're starting to see a little bit of a higher low in the indicator reading itself. So if the MACD indicator can continue moving higher, possibly above this old trend line, which was signifying negative momentum previously, that would then start to be your positive buying signal or a signal that share prices are ready to continue moving higher. As things currently stand, the dominant trend momentum reading is still negative. As we can see, there is some evidence that a positive trend might be in the early stages of developing, but the broader trend activity is still negative. So right now, I think the balance of the evidence would suggest that $6 will wind up breaking to the downside. That doesn't necessarily mean that it must occur. You do still have two positive bullish harmonic patterns that are forming here. So it is possible that these actually do catch the bottom. And, the most bullish possible scenario would be that the stock moves back above $20 per share, which would be the number 4 price target for both of these price patterns. But right now, if you forced me to make a projection or a prediction, I do think that the more likely scenario here would be a break to the downside. I just think that there's a lot of selling pressure and not a lot of bouncing activity that's occurring in these lower levels. I mean, you're not really seeing much upside here. Things are trading really heavy into a support zone, so that tends to be a negative signal. And then when you combine that with the fact that the trend momentum is still bearish, I just don't think there's enough of a reason to believe in a reversal just yet. I don't think it makes a lot of sense to buy the stock at these lower levels. I would rather wait until you see some evidence that a bottom is actually in place. That might not mean that you actually get the lowest possible price on the stock, but it would actually give you a better trading signal, a higher probability trading signal. Because as things currently stand, there really is just not much evidence that we're ready to start to reverse higher just yet.